let's start with relevant costing. Remember, we're supposed to have this class on 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 Wednesday. Then something just come up. Then we had to reschedule the class. So let's have the class on relevant costing so that we can finish the topic. Remember, in our previous class, we say we're focusing on what is relevant cost in decision making. Then we come here and say, when we are looking at relevant cost in decision making, we are looking at the financial effect, that is the overall increase or decrease in cost and revenue that will result from a decision to take a certain action. So when you are making a decision, you need to use relevant cost. So what is relevant cost here? When we talk of relevant cost, we are saying these are the costs that will be incurred as a result of a decision being taken. So what it means is, if you don't take a decision, you are not going to meet those costs. If you take a decision, you are going to meet those costs. So that those are relevant costs. So in relevant costing questions, we should focus on if a decision is taken, what are the incremental costs going to be? So those are the relevant costs. If something is a cost that will be met, whether a decision is taken or not, so that is not relevant in your decision making. Because even if you don't take, it's still going to be, it's still going to be met, even if you don't take a decision. So that one is not going to be a relevant cost. So relevant costs are incremental costs that will result from a decision being taken. So that's basically what we look at when we look at relevant costs. Right. So let's check on here. I think this will give us a guide. Relevant information. Relevant information will be a differential future cost or income. So which means if a decision is taken, then the cost is going to increase. So in that case, it becomes a relevant cost. If something has already been met, like a sunk cost, is something that has already been paid. So that one becomes irrelevant in decision making. So when you are making a decision, you don't take it into account because it's not relevant to that particular decision. So that's basically relevant cost. So when you are doing your questions on relevant cost, look at the decision. What is the decision? The decision is to accept, let's say our decision is accept a special order. That's our decision. We want to accept a special order. Then when you are doing your relevant income and your relevant cost, you look at if we accept the special order, what is going to be the income? If we accept the special order, what is going to be the cost? So these are going to be your relevant income and relevant cost. So it means if you accept the special order, what is going to be the income? If you accept the special order, what is going to be the cost? So it becomes relevant relevant cost. If something is going to be a cost, whether you accept the special order or not, it's not a relevant cost, because whether you accept the special order or not, you are still going to meet that cost. So that cost is not going to be relevant. If an income is going to be generated, whether you have a special order or not, so that income is not going to be relevant in your decision. Because whether you accept a special order or not, you are still going to receive that income. So a relevant cost or income is something that will arise as a result of a decision being made. Your decision that you have made and the cost that you are going to incur as a result of that decision are relevant costs. So that's basically when you are looking at your relevant cost question, look at what is going to be the income if a decision is taken. What is going to be the cost if a decision is taken? Those are relevant income and relevant costs. So that's basically what you guys should look at when you are doing your relevant cost. I think you can check here. Relevant costs are future costs and revenue. They are incremental. They are cash flow. Then we have non-relevant sunk costs. Sunk costs are costs which are not relevant. Those which has already been made, like development costs. Then we have committed costs and non-cash flows. Like here, we have depreciation. Depreciation is a non-cash flow item, so you don't take it into account in your relevant cost. Then we can have here, fixed costs can be irrelevant or relevant. I want you guys to look at this part. They can be relevant or irrelevant fixed costs. When do they become relevant? If they increase, if fixed costs are going to increase as a result of a decision being taken, then that part that is increased is going to be a relevant cost. Right, so that's there. So I want us to look at here decisions under conditions of paternity. Can you guys mute yourself? Mute yourself, please. You unmute yourself when you want to say something. For now, just mute yourself. Okay, so let's look at the following three types of decisions are discussed. So in our questions for relevant costs, we are going to meet these three. It's either we need to accept a special order, it's either we need to make or buy, it's either we need to close down a part of the business. It's more or less the same thing. You want to accept a special order. How do you accept a special order? You look at the relevant income. Incremental income and incremental cost. If the incremental income is more than the incremental cost and is going to increase revenue for the organization, then it means you ought to accept the special order. So if a question say assess whether, these are the type of questions that you'll come across. Assess whether ABC should accept the order in Can you please mute yourself? Who is that? Can you please mute yourself? Mute yourself, please. Mute yourself, please, so that we don't hear. Right. So I was saying we assess whether ABC should accept the order. So when we say assess whether ABC should accept the order, that's the type of wording in the question. Assess whether ABC should accept the order. You are given information about ABC special order. So in the information, if the question is like this, what you just need to do in your answering is to look at, you need to calculate. You cannot assess without calculations here. So you are going to calculate the income. What is the relevant income in the special order? Then what is the relevant cost in the special order? Then if the relevant income is greater than the relevant cost, then you are now going to conclude by saying ABC should accept the order because it's going to increase the revenue for the organization. So if a question says assess, it means you just have to calculate this. In FAC, MAC, if you need to make a conclusion, it means you need to make a conclusion from the figures that you have. That's the only way you can make a conclusion. So if a question does not say discuss, unless it says discuss, then there's no calculation there. But if it says assess, which means you need to assess using your figures that you are going to have. So in that case, it means you need to calculate and see if the special order is going to give a relevant revenue to the organization. Right? So the same applies to make or buy. If the question is asking about whether, assess whether ABC should make or buy a product, it means you need to calculate the cost of the relevant cost. Here we're talking of relevant cost of making the product and relevant cost of outsourcing. If the relevant cost of making the product is less than the relevant cost of outsourcing the product, then you need to make the product. So here when you are given two options to choose from, it means you need to calculate the make and you calculate the buy. It's a cost here we are talking about. Or if you are to calculate, if the information is given you until, it depends on the information provided. If your information allows you to calculate the profit, then it means you are going to be guided by the profit that is going to be made. But in most cases, you will be guided by the cost. The cost is of making and the cost of buying. You compare those two. Then you see who has got lesser cost, making or buying, then you choose a decision there. So these are straightforward questions in the exam. They are not that, what is important for you is, remember I always say this, is what is important for us guys is to know a question and relate the question to a topic. I think if you work that way, you'll find that you are not going to have too much challenges in your MAC. The moment you identify that this question is relevant cost, you'll see that it's going to be easy for you to answer that question. But if you cannot do that, then you will see that it's going to be very difficult for you to answer the question. Because the moment you identify that this question is on relevant costing, so what are you going to look at into the scenario? You are going to look at the relevant income and relevant cost. You are going to look at the relevant income and the relevant cost from the scenario, because we have already identified that this is relevant cost. So which means from the scenario, you are going to look at relevant income and relevant cost. Then you make a decision based on that. So it's very important to understand from the scenario which topic is being tested on this question. That's the first thing that you need to understand. Which topic am I tested here? Then from there, based on your understanding of that topic, you know the structure of the topic, what is needed in that topic. Then you can just compile your information based on that particular topic. So it's very important for us to understand our topic from topic one until the end. So that the moment you read a scenario, then you know which topic. Is it absorption costing? Is it relevant costing? Is it direct costing tested here? So if you know your direct costing, it's going to be easy for you to compile your figures under the direct costing. Okay, then let's look at now this one, close down the part of the business. How do you determine whether it goes down? Here, we look at the cost of continuing and the cost of discontinuing. Those are some of the things that you should look at. What are the costs of continuing and what are the costs of discontinuing? So if the costs of continuing are less than the cost of discontinuing, then it means you can even continue, even if you are not making profit. Because we are now going to compare the relevant cost. How much is the company going to take to pay if it discontinues this product or part of the business? So if the money that they are going to pay in terms of cost of discontinuing is higher than the money which we are going to pay when we continue, then it means we need to take a decision based on that. So what you look at is the relevance. So in the relevance, you look at what are the costs that are going to be incurred when we close down, what are the costs that are going to be incurred if we don't close down. Then you compare those costs. Then you make a decision based on that. Okay, so that's basically, so I want us to look at a question here. Remember in our previous class, we're supposed to look at this question, then something just come up. It says Bubble Gallo is a manufacturer of bubble gum. Their available production capacity for a month amount to, I remember I said this must be 1 million, amount to 1 million units of bubble gum, while sales are only 800,000 units in a month. The bubble gum is sold at 4 rand per unit. At the end of December, a leading toy manufacturer approaches Bubble Gallo to supply 150 units of bubble gum, which will have to be modified in size in order to fit into their. So this is a special order. They were approached to supply 150 units of bubble gum, which will have to be modified. So there is a special order of 150 units. And check here also that 800 units are the ones they are currently selling, and our capacity is 1 million. So you can see there's still capacity here to take the special order. In terms of capacity, we still have the capacity. There's 1 million minus 800 minus 150. We're still left with 50,000 here in our capacity. So in terms of capacity, we are fine, right? So let's look at the other part. They say the toy manufacturer is offered a total contract price. This is the revenue, incremental revenue. So this is going to be the incremental revenue of 450. Then the variable cost of the special order will be the same as a normal bubble gum, except that an additional 75,000 will be paid for the modification. The variable cost of normal bubble gum is 1 rand per unit. Fixed cost for the bubble gallo facility amounts to 300,000 a month. Then they say assess whether the toy manufacturer order ought to be accepted. So we need to assess whether the toy manufacturer order has to be accepted or not. Where do we start with this? So, which means we need to look at the relevant cost. We need to look at the relevant cost. So we need to assess whether the toy manufacturer order ought to be accepted. So it means we are going to look at relevant cost. So we're going to look at relevant cost and income. So what is going to be the relevant income here? In this order, what are we going to take is our relevant income. The toy manufacturer is offered a total contract price of 450,000. Yes.
Are we not supposed to check the capacity first?
Sorry?
Hello?
Yes. Hello? The capacity, I hate him talking about capacity. We already said we have a capacity here. This is 100 million, and this is 800. So we are left with 2. So we already have our 50 extra here. So the capacity is fine. In terms of capacity, is fine. So we want the relevant income. What is going to be our relevant income here? The toy manufacturer is offered a total contract price of 450,000. That's the relevant income, the contract price. If we don't take this order, it means we are not going to have this 450,000. So this is going to be the relevant income. What else is going to be our relevant income from the scenario? Relevant. Let's just look at the relevant. The 800 units is not relevant. Is it relevant? sales of 800 units in a month, are they relevant? The sale of 800 units in a month, are they relevant?
No.
Not relevant.
Why? Why are they not relevant?
Because they are already, whether we take it or not, we will receive them, or no matter what, we're
Yeah,
gonna get them.
yeah. So which means these 800 units are not relevant to the decision. Whether you take this order, you're still going to get this revenue. So they are not relevant. So in some of your questions, like some of the questions that I see, you sometimes the question might require you to enter everything here. Whether it's relevant, you just have to indicate that this is irrelevant. So it depends on the question. You may find that some of the question might require you, like here, you just say income, then you say contract price, then you say relevant, then you say normal sales, then you say irrelevant, which means you're not going to record anything here. These are some of the questions that I come across in your syllabus. So if they require you to enter everything, what is important now is to determine whether this is relevant or not relevant. Then you enter them accordingly. And so in our case, the contract price is relevant. So let's look at the relevant cost. So here we can say we can less the relevant cost. Who are the relevant costs here? We took our relevant income here. They say the variable cost of the special order will be the same as a normal bubble gum, except that additional 75,000 will be charged for modification. So modification is going to be an incremental cost or a relevant cost. Am I right? Because if we don't accept the order, it means we will not take this into account. Because remember, these guys, they say the bubble gum is going to be modified here. So there's going to be a cost of modifying. This special order has a modification in it. So which means we are going to meet 75,000 modification cost. So this one is going to be a relevant cost, the modification. It's going to be how much? We say it's 75,000. So this one is going to be I can't. Right, then let's look at what else is going to be a relevant cost from our question. You guys, are you following? Is everyone following? This thing is not, even in the exam, it's not something that you guys should be struggling with. As long as you understand your topic. Like here, we are looking at the relevant cost. Who else is going to be a relevant cost here? From the question. Who else is the relevant cost? They say they want to supply 150 units of bubble gum, and the variable cost of a normal bubble gum is R1 per unit, and the variable cost of the special order will be the same as the normal bubble sum. So which means this variable cost of 150 is going to be a relevant cost. So it's going to be a variable cost. It's going to be 150,000 units times 1 rand. How much are we going to have? It's going to be 150. That's the variable cost. What else is going to be our relevant cost here? What about the fixed cost for the bubble gallo facility amount to 300,000 per month? What is going to be that fixed cost?
It's irrelevant.
It's irrelevant. This one is going to be irrelevant.
It's going to be irrelevant.
Yeah, if the question requires you, like what I was saying before, to write everything, so which means those fixed costs you can come and write them here, and then you say, you just come and say like here, then you say irrelevant. Then it means there's no figure here. So if the question wants you to include everything in the scenario, then you mention whether it's relevant or irrelevant. It means you need to write everything. Then you mention whether it's relevant or irrelevant. Right. So let's look now at if there's any cost that we can take here into account. In terms of capacity, we agree that we have the capacity here, which is 100 million, 1 million minus here. We still have the capacity. Then what else do we need here? I think that's all from this question. So we need to calculate our relevant cost. It's going to be 225 here. So our relevant is going to be how much? 450,000 subtract 225. So it's going to be 225 again. So this is, so what are we going to say? Remember the question says assess. The question here says assess whether the toy manufacturer order ought to be accepted.
It
So
means
this is, yes.
if
So what are we
there is
going
a profit on, we are going to accept the project.
So we say accept special order because it increase our revenue. So we're going to accept the special order because it's going to increase our revenue. Okay. So this is what it might be long, whatever long it is going to be. But what I will emphasize is understand the question, which topic. That's the most important thing in your MSc. Which topic? Assess whether the toy manufacturer ought to accept the order. You have your scenario here. So, because in the question, in the exam, nobody is going to tell you that this is relevant cost. That's the bad part of the question paper. They will not tell you this is relevant cost. So what you need to do is they will just say assess whether they should accept the order or not. So you know that's a decision making under, which means you are going to use the relevant cost. Any decision making, remember I said, whenever you are doing a decision making, you are going to use the relevant cost. You will see when we do capital budgeting. Capital budgeting is a decision making tool. So which means there you also need to use relevant cost. I think those who have done capital budgeting before, like in your NAC 2602, you will see that when we are doing capital budgeting, costs like research and development, we don't take them into our decision making whether to accept the project or not. Why? Because they've already been met. Whether the project goes on, the research costs have already been met. So which means they are not relevant in your decision here. So that's basically how you do the topic for relevant costs. As long as the topic is a decision, you are going to make a decision, then it means you need to make relevant in that decision. As long as it is talking about you to decide, then it is going to require you to use relevant cost. Right. Unless if there's someone with a question, we can move on to yes.
Okay, thank you, Lovemo. My question is that we are not also comparing the normal cost against the special order. For example, our total cost there is the same as the total income for the special order. So if we accept now, the profit will be added. Can you please just scroll down? Yes. You see, those costs there are the same as the profit. So my question now is that if we say this additional profit is increasing our profit, also these costs here, they are also increasing our cost. So we are not also required to prepare the normal income, the normal statement as well, then to compare the cost. For example, if our cost of our normal budget, they are more, it means that we have lost now because the cost will be plus these ones. I'm not sure if maybe you understand me.
Yeah, I'm trying to get you there. You are saying, like in this case, we are talking of relevant cost being 225 and relevant income being 225. Then you are saying, are we not supposed to compare the normal cost? Like are you talking of the cost for the irrelevant cost?
Yes.
Right. While if we are there, whenever you are doing, remember we say relevant cost. As long as you understand that you are going to deal with relevant cost, it means there is no need for you to compare those relevant costs with irrelevant costs. Why? Because those irrelevant costs, whether you, like in this case, whether you accept the special order or not, you are still going to pay those irrelevant costs. Like here, the bubble gallon facility amounts to 300,000. Whether you accept the special order or not, you are still going to pay those costs. So which means in your decision, they are not relevant. they are not going to affect your decision, because whether you accept the special order or not, you are still going to pay them. So as long as you are dealing with a decision making, focus on relevant income and relevant cost. Are we going to have, if in this case, the only thing that was going to stop us from accepting this order was if the contract price is less than the relevant cost, then we're going to say there is no need for them to take the special order because the price is less than the cost that they are going to incur. So in that case, there was no need. So in all your questions, once you identify that you are going to deal with a relevant cost, there is no need for you to compare the relevant cost with the irrelevant cost. Unless like here, let me just take something here. Where you compare two items is a situation like here. Make or buy. I think that's what we are going to do now. The next thing that we're going to do. This is the only way you can compare. If the question requires you to determine whether to make or buy, it means you need the relevant cost of making and the relevant cost of buying. Then you compare those two. But if it is only a special order like this, as long as there is going to be incremental income from the special order, then it means it's going to be accepted in that case. So I don't know if I answered the question or there's something that still needs clarification there. So what my main point is understand that we are dealing with a relevant cost. That's the only thing, so that you don't get much confused. You are dealing with relevant cost. So in my question, who is relevant and who is not relevant? So if someone is not relevant, it means it's not going to be part of your decision making. I don't know if you guys get what I'm trying to say here. Right? Are you there, Joseph? Do you get the sense of what I've been trying to explain?
Yes, thank you. Thank you so much.
So the most
I
important
understand.
is relevant cost. That once you understand that you are dealing with relevant cost, which means those irrelevant costs are not part of your decision. They are not going to form anything in your decision. You don't even need to worry about them. Why? Because whether you make a decision or not, you still have to pay. So they are not part of your decision making. So that's why I was saying, in your math, understand the topic. Remember, we have these things are different as the topic. Here we are talking of relevant cost. You will see that when you do a topic like performance management, I think we'll do this as our last topic for make costing part. I think this will be this will be our last topic. But you also, when you are doing a topic like this, they will ask you a question like, assess whether division A should get a bonus or not. And those who have done this topic before, you will see that when you are doing performance management, there's a way. So what I'm trying to say here is understand the topic. As soon as you read the scenario, you will see that when you are doing performance management, there is another way of doing it, which is different from other topics, but it's still costing. But you'll find that so once you determine that this is performance management, or how do I do performance management? Performance management, I focus on, I want to determine the performance of the divisional manager. So which means I will have to focus on their income and cost, which they can have control of. So which means they will be working on income and cost, which the divisional manager has control. So you see that's why I'm saying it's very important to know each and every topic, so that when you read a scenario, then you know which topic is related to this scenario. Then you apply the principles of that particular topic. In that way, you will find that everything is going to go smooth in your MAC. But unless there's someone with another question, I want us to look now at here, make or buy decision. You want to decide whether to make or buy. You see here, we are having two options. It's either we have to make or we have to buy. So if the question is like this, you have to make a decision based on but when you are making a decision, there's something that I left out. We can have qualitative. Sometimes you may find that quantitative only, like figures only, cannot. So if the question requires you to use qualitative, it means they want you to use non-financial factors in that case. But most management accountants, they prefer quantitative factors, because that's when the company can be able to make profit based on quantitative factors. You cannot rely on qualitative factors, even if the government is the one that can rely on qualitative factors. Because the government will say, if we discontinue the product, they will look at the people. What are the people going to do? What is going to happen to the community? So in that way, it means the government will focus on qualitative sectors. But when it comes to a profit organization, they focus much on here. Even though they will consider qualitative, but they will first come here. Are we going to make profit out of it? If not, then if not for now, then they will now say, okay, that there is a probability that in 3 to 5 years, maybe we'll be able to get a good return. Then that's when they can continue even if there is a loss. But if there is no that probability, they won't rely on qualitative and people on making the product. Right? So here we are going to compare whether we have to manufacture or acquire it from the external part. I want us to do a question on this. Right, the question is saying, Mayan Limited operates a lodge and conference center in the Limpopo province. The board is currently evaluating the possibility of outsourcing the catering at the lodge. You see, these guys, they are trying to evaluate the possibility of outsourcing. So the management accounting has prepared the following cost schedule and has also expressed the cost on a head basis based on current level of, so they have 5,000 employees. So these are the costs that were scheduled by the management accountant. They say the cost of the meal, catering labor. Normally, your note additional information. Mostly our additional information, that's where we get our answer. In our MAT, your additional information is very important. That's the answer, the additional information. So let's look at the additional information here. They say a catering organization is offered to do the catering at an all-inclusive price of, you see here, 85 rand per head. These guys, they have 5,000 employees. So if you multiply 85 times 5,000, this is what the catering company is going to charge. So which means what the catering company is going to charge is the outsource, is the buy. Then let's look at the make now. Catering will be done at the lodge. Should Manyan accept the catering organization's offer, 40% of the catering labor can be released with no retrenchment cost. The other 60% will be transferred to other parts of the organization where they can be productively employed. Fixed catering overheads for the eating areas comprise an allocation of the rental that Mayano pays to the landlord of the lodge. So you can see here, fixed catering overheads for the eating areas. They are already allocated to the rental paid for the premises. So it means they are not going to be relevant here. Because already if they are paying 1,000 as their rental, it's already there for this eating area. So it's not going to be relevant there. Then they come here and say, assess whether the catering ought to be outsourced. We now want to assess whether we need to outsource the catering. So when you are, so which means you need to compare the outsource and the buy. They are going to say buy. Then you say make. Yeah. Here you are comparing two. You want to compare. So you cannot compare without figures. Assess whether the catering ought to be outsourced. Right. So let's look at how are we going to do it. So there's a buy and make there. So what is going to be relevant costs here? Who are those relevant? Are we there? Are we there? Who are those relevant here?
I think the 85 rand for the cost of the food is the relevant, first relevant cost.
Okay. So what do you call that one? We call it external catering. So it's going to be 5,000 times 85. How much are we going to have there? $425,000, am I right?
Yes.
425,000 if we do external catering. Then let's look at if we make, what is going to be the make? What are the relevant costs of making here? The total cost of the meal is going to be 250,000. That's the cost of the meal. Total. So it's going to be 250,000. What else do we need here? There's labor. Catering labor is 125,000. But here, let's look at which labor is going to be relevant here. They say catering will be done at the lodge. Should Mayane accept the catering organization's offer, 40% of the catering labor can be released with no retrenchment cost. The other 60% will be transferred to other parts of the organization where they can be productively employed. I think on labor we should get our relevant cost here. Which one is going to be relevant? 60% of the labor or 40% here?
60%.
Relevant. The other is 60% going to be relevant.
Yeah, I think
Yes.
this is going to be relevant.
Because anyone who thinks in another way, who also has another suggestion, who is going to be relevant here? Is it 60 or 40? Right. Yes. Yes.
I think
Yes.
40%.
Yeah, 40% is relative. You see what you look at when you want to check whether 40% is the one that is relevant. They say 40% of the catering labor can be released if they accept the catering organization's offer. You see here, if they outsource, then they can release 40% of the catering labor, which means it's going to be relevant in this decision. If we outsource, it means we are going to release 40% of the catering labor. This 60% is not relevant because these guys are going to be transferred to other part of the organization where they can be productively employed. So the company still pay for this 60%. They're still going to be on the payroll, this one. But 40%, if we accept the order, 40% will be out of the payroll. So it's a relevant cost, this 40%. Because if we make a decision, then it's going to be part of the relevant cost. Right. So it means here, our 40% of the labor, catering labor is 125. So it means it's going to be 40% of so it's going to be labor. How much are we going to have there? So what is important is your understanding of the story. I'm getting here 6,000. I don't know if I'm correct. But so our labor is going to be 40% of this. That's the relevant. So what is going to be the next one? Who is relevant here? It's the variable catering overhead. It's relevant, yeah? Am I right? The variable catering overhead is going to be relevant. So it means we take those ones. So here we can say relevant. So it's going to be 100,000. So that's the variable catering overhead. Then what else are we going to take? We are left with fixed catering overhead, 80,000. Is there no? Okay. Fixed catering overhead for the eating area comprise in allocation of the rental that Mariano pays to the landlord of the lodge. So which means this one is going to be irrelevant. This one, the fixed catering overhead. Do you say that is irrelevant? Why? Because this rent is already allocated to what these guys pay. The rental which they already pay is where this fixed catering overhead is. So that 80,000 is already part of the rental which they are paying. So it means it's not going to be relevant in this decision. So what else do we have? Do we have anything relevant here? I think that's all. So let's check now the total relevant cost.
Sorry, Lovemore. There is a question on chat box.
Yes. Can I just ask the question direct to them here? What is the question? Hello, what is the question?
Okay, it says, why are we still adding the 40% to the cost, but labor is released?
Okay. Why are we adding the 40% to the cost, but the labor is released? Anyone who can have an idea, why are we adding the 40% and the labor is released?
Okay, I think the reason we're adding the 40% is because of we want to know how how much it's gonna cost us if we accept the offer, the cost of retrenchment, how it's gonna cost us, because the other 60%, the labor of 60%, whether we accept it or not, still the employees, they are in the organization. But the 40%, then we want to know that how much it will cost us in terms of the retrenchment and so forth. I think
Yeah,
so.
yeah, oh, we are almost there. And let me just say maybe, but we have already say it out. What he is saying is Remember here, let's start here. The catering labor is going to be 125,000. So which means here, if we accept the order, we are going to release the 40%. So it's going to be a relevant cost in the sense that it's going to be part of the cost when we accept the catering organization's offer. So this 40% is going to be paid to these people with no retrenchment cost. So in that case, it means it's going to form part of our decision. If we accept the order, then it means we are going to pay these people 50,000. And then the 60%, it has nothing to do with accepting or not accepting, because those guys are still going to be within the organization, whether we accept the order or not. I think that's what he said. I'm just elaborating there. I don't know if you get the sense of it there. That's why I was saying the first thing that you ask or tell yourself is relevant cost. This is relevant. Is this relevant? Is this irrelevant? So it means your decisions are going to be made by the cost that you are going to meet if a decision is going to be taken. Right? I don't know if answered. So this one is going to be 425, and how much is going to be here? 100 plus 250, 350 plus 50. So this one is going to be 400. So what are we going to do here? Are we going to accept the order or not? Are we going to make or buy? Based on our figures, quantitative factors. Are we going to make or buy? Are you guys there? What are we going to do here? Are we going to make or buy?
I think we're going to make.
Yeah, you just compare your figures here. You have already done the work here. If the question wants you to assess, the most difficult part is this calculation. That's the most difficult part. Once you are done with your calculation here, it means you are just going to compare the figures. This is if we outsource, we're going to pay 425,000. If we make, we're going to pay 400,000. So which means we are going to make. So our conclusion is going to be based on quantitative that they have to make because the cost is low. Let's just look at something that you guys might come across in your question. They may say also consider the qualitative factors. What are the non-financial factors that we can consider when we want to outsource? What can you consider? You want to outsource. What can you consider there? Sometimes you may find that you are going to tell yourself that we are going to do it in-house at 400. But there might be qualitative factors here. What might be the qualitative factors, which are non-financial, to outsource?
Okay, maybe I will say the quality that we're gonna get from outside.
Yeah, you may find that quality might be good, even if you guys decide to make, but your quality might, you don't have the experience. Your people or your facilities are still new. You don't have the experience. Then the quality is going to be low, and people will not come to work. Sometimes they are sick because of the food that is being made in the company, which is even going to cost the company more. So quality should also be considered. That's why sometimes you see that even when you are tendering, people will end up choosing someone who has got a higher price than you. They also look into non-financial factors. Even when we do our tender, they also look into non-financial factors. The reliability, the financial status of the company. Is the company, that's why they will ask you about your financial statement. They will also assess, is this company not that company that will, after we give them the work, then they can't pay their employees and the employees are on strike and we can't get our orders. So they also look at all some of the non-financial sectors. Even if your price is good, but they also look at non-financial sectors. What else can we consider in terms of this catering?
Reliability.
Quality, reliability of the catering division. Yeah, if they are more reliable, then it's something that we should also consider there. What else can we consider? Let's have one. Financial. Don't leave this, it's very important. If a company is not financially stable, don't give them an order. Why? Because they will not even be able to these are the kind of companies that normally wait for the customer to pay so that they can start to get the material. So the financial stability is also important. Once they are going to disturb somehow financial, they will end up failing to deliver. So when you are answering your question, expect qualitative and quantitative. But in management accounting, we focus more on quantitative, even though we look at the qualitative, but our more emphasis will be on quantitative first. What is the profit this product is going to give us? How much? What is going to be the cost? So that's basically how can we reduce the cost. But we should also look at the qualitative sectors, the non-financial sectors into the product. Right? I think we are there. If there is anyone with a question on this one. So if the question requires you, while you are here, remember I said the question might require you to include everything. So which means we're going to include the irrelevant. The irrelevant can include them. Then you indicate irrelevant. Which means the 60% this labor is irrelevant. And who else is irrelevant? Then this 6 scattering is also going to be irrelevant. You can include it and just mention that it's irrelevant. Like most of the questions that I see in the exam, they require you to come here and say, you include everything like here. Like we were supposed to include that 60% labor, then we say irrelevant. Then we are supposed to include the catering overhead, then we say irrelevant, which means they will not affect our figures here because they are not relevant. So at the end of the day, you still come up with this figure. It depends on the question, but I see some of the question will say include, if you see a question saying explain why something is irrelevant, then you know you have to mix them. Then you just have to explain why it is not irrelevant in that case. So those are some of the questions. If you check this question paper, check the October-November 2024. I think it's on, it's not question, it's not, it's question 1, number 3. You'll see that there's a question on relevant costing there. The first one was what was transfer price, if I'm not mistaken. Then the third one is just relevant. Check on that one, there's relevant cost there. Right, let's now look at it. What are we going to do? Remember I said this thing is not going to be very much. Closing down. How do you make a decision to close? There is the cost of continuing and the cost of closing down is what we are going to compare here. We are going to discontinue, but if, let's say in your question, there are 2 criteria that you can have here in your question. Sometimes they may not give you the cost of continuing. They just give you the financial information about the company. So if they ask you to evaluate whether they should close down, in that case, it means you need the income, relevant income, less relevant expense. If there is going to be a loss, then it means these people can close down. But if you are provided information like the cost of discontinuing and the cost of continuing, then it means you need to compare those 2. So you should look at this, whether you are comparing 2 or you are just looking at one area. So if you are comparing, it means you calculate the cost of discontinuing and the cost of continuing. Then you compare the 2. I don't have a question on this one because it's more or less the same like what we have done. So I want us to look at this under more. Remember what we were doing were decisions under conditions of certainty. Now we are now doing probability and certainty. You check in your next, what is it, 2601, there's a full topic for probability. So when you are doing decisions under conditions of uncertainty, you can use probability, expected value, decision trees, right? So a probability is, I think we always say probable to rain. What is the probability of having rain? So if our probability of having rain, if the guys say 85%. That's the probability of it raining today. And what is the probability of it not raining? Then it's going to be 15%. So that's how we use our probability. But I'll ask you guys that we are not going to use it much, this probability for MNC. Right. So if there is a probability attached to an outcome, then it means we use that probability to determine the outcome. Then expected values, these are what sometimes we are required to come up with. Expected values. What are these expected values? When we talk of expected values here, we're talking of something like this. We are not sure here. So we have a probability. The probability of making 100,000 is 0.05. The probability of making 110 is 0.25. The probability of making 100. So these are the what we think we can. That's the probability of making that. So these are expected values. We expect this. So when you are having a situation like this where you have the probability of each outcome here, so your expected value is going to be the total of these probabilities. You have to multiply by the probability, then you get here, you get here, you get here, you get here. That is going to be your expected value. So if it is a question like this, here you can see we have two products here. There is Mac hair shampoo and Mac board soap. And then we are required to determine whether the organization ought to manufacture hair shampoo or board soap. So what we are going to do when we have this kind of a question, which means we need to sum up the expected value of making hair shampoo, then you sum up the expected values of Mac board soap. So if the one that is higher is the one that you are going to take, it's still the same here. It's a decision. So which means we take the one that is going to give us more income. So when you are given this kind of probability, then it means you need to determine the expected value. So let's do it together and see, are we going to make hair shampoo or make board soap? So let's have the expected values of making hair shampoo. We can share. One can do the first one, the second one until the last one there. Let's have the first one there. Who did the first one there? 100,000. So what is going to be the first one, the expected value for the first one? The expected value for the first one. When I say these are probabilities, which means you are going to multiply the expected profit by the probability. So what are we going to get on the first one there? The first one is going to be 5,000.
5,000.
Who got the second one?
5,500.
27,500. The third one is 120 and 48,000. Am I right? $26,000. Who got the last one there?
$14,000.
14,000. So we add them. So when we add them, that's the expected value, the weighted expected value. So it's going to be 14 plus 26. I'm getting here 120. I don't know if you guys get the same like me. 120,500. Is it correct?
Yes, it's correct.
Yeah.
So if you are given something like with the probability, these are the expected values. So you just have to add to sum up the expected value of each outcome. If you add them, it means your arithmetic mean is going to be 120. This is within this. So this is what we expect to get. This is the expected value. I saw a question on this expected value, but it's long back. It should be 2021, the question paper for 2021. If you check the one for 2021, you see a question for expected value, October, November 2021. Right, then let's do this one so that we can determine. So this one is going to be 80,000 times 0.15. This is
12.
going to be 12,000.
Yes.
Then the second one,
11,000.
then the third one,
48,000.
is going to be how much? 48,000.
Yes.
Then this one,
14,000.
14,000. Then the last one there,
87,500.
37,500.
Yes.
Am I right?
Yes.
Then we add. So how much are we going to have?
122,500.
So it's going to be 122,500. So are we going to manufacture shampoo or both soap based on quantitative? So it means we are going to make hair shampoo here, no?
Yes.
Because the cost is going to be, because here we're deciding whether we should make, so which means the what, which one are they going to make? Is it revenue or expense, the what we are calculating here?
We're calculating revenue, so we're going to take the bottom one.
Yeah, excuse me, I'm thinking of the cost. So we're going to take, we're calculating the revenue. So the one with the higher revenue is the one that we are going to take. If this was the cost, it means we're going to take the one with the lower cost. So that's another area that we should be careful in the exam. So which means here we should look at what do we have here. Is it profit or cost? Like in this case, it's income. So the higher the income, the more favorable the product is going to be made. So in our case, it means we are going to make both shops. Right? What can we say are the qualitatives there? Let's look at the qualitatives.
Maybe the diversification of a product today.
Yeah, we can also, sometimes you may find that the profit that the income here, even though it's going to give us 120,500, but it's contributing revenue. So we can also talk of diversify. What else can we look at? We can also look at, remember, we have those customers for hair shampoo. We should also consider our customers sometimes. We should also consider the customers for hair shampoo. And what else can we also take into account there as a qualitative factor? Right. What else can we there is no quality here. I think we should also consider the customers, yes, it's there. Right. So that's basically, so when you are making a decision, you should always make sure that you also take into account the qualitative, that in management accounting, mostly in management accounting, financial accountants, they don't make decisions. They report historical figures. So management accountants are the ones that make decisions. So in management accounting, we always make sure that we focus on figures. If a question requires you to make a decision, you cannot go to senior management without the figure and give them a decision and expect that they will buy your decision. What they want is a detailed calculation, then with your recommendation there, an explanation of what should be done and what is going to be the outcome. So that's basically in management accounting. So this is, I think that's the end of our relevant costing. Yeah. So what I want us to do is, you guys, you didn't send me, those who are doing the year module, your topic for test one. I'm using the ones for last semester, so I want the ones for this semester. So if there's anyone who can send us the topic for FAC and MAC, so that we know, because I was checking on the exam, so the